Welcome back to Stocklabs for another market recap. So we finished up the month of March. First quarter ended, and the trading week ended on April 1st, April Fool's Day. Overall, it was kind of a choppier week. Our oversold signal from a couple of weeks ago expired on Monday, and then we kind of put in the weekly high on Tuesday, followed by some sort of just drift downward into the end of the week, basically. So for our major indices, the performance was probably felt worse than it actually was because it was, I mean, a positive week. Qs were up 0.8. S&P was flat. The small caps were up 0.6, and the Dow was completely flat. Bonds had a rare up week, and gold was down as well as oil got hit. We have some news from the administration. They're going to go on some plan to be releasing stockpiles from the SPR in order to, in some attempt to keep a lid on sort of gas prices at the pump. But we'll see if that plays out. There's a lot of cross currents in all the energy markets really now. Okay, for our major tech stocks, they were somewhat mixed off the top of my head. Yeah, okay. So Tesla was up 7%, nice week, kind of around this 1100 level. So Tesla sort of continued a little bit of its bounce, the bounce that had started a couple weeks ago. Some others started to, fall off a little bit. I mean, Apple flat, Amazon down a little bit, Google and Nvidia, sort of the underperformers, down on 1% and 3%. Semis had a tough week. Microsoft up, Facebook hanging in there. So, overall mixed picture from the mega caps that sort of lead our market. So the overall market was a little, it was a little listless the second half of the week. Our industry breadth was a little bit more of the same. So basic materials have, they flattened out a little bit, down 0.6 on a median basis. With oil getting whacked, pretty hard for the week, you kind of expect that. Actually, you could probably say they hung in a little better than you would have thought they would with the sell-off in crude. Utilities, big outperformer, up 3%. This is sort of a risk-off indicator. When the utilities are far and away outperforming every other sector, that's kind of barely hanging on or down, it could be a sign of a little bit of rotation back into more of a defensive posture versus risk on. So, without maybe a new catalyst, our bounce that started a couple weeks ago, it's kind of it's possible that it just fizzles out, and the trend really is to the downside. But we'll keep an eye on that this week. Subsectors, not a whole lot on upside. So I mean, we had a decent amount of green sectors, but for things that are up 5%, which is more of the moves that we're looking for, there's not a whole lot to choose from. Kind of just a bunch of random stuff. And then on the downside, trucking down 10%. Cannabis trade is unraveling from that news item we had with the the ever impending legalization. So the hot money has abandoned that trade. But then, there aren't a whole lot of sectors that are down big numbers either. So, a flat sort of consolidative week in the markets overall. You see a bunch of semiconductors sort of kind of on the brink of, not on the brink, but the semiconductors, a lot of their sectors were sort of leading on the downside, which is one thing that's really not a good sign. So keep an eye on semis, SMH, SOX, all of that stuff this week for um, sort of what the market's looking like from a risk perspective. It's always said semiconductors lead the Nasdaq, Nasdaq leads the overall market. So you know, semiconductors definitely sort of a bellwether industry that you have to keep an eye on. We'll jump into screener just to check on our breadth breakdown from just purely market cap standpoint. Okay, 0.9% up for 1 to 5 billion. 5 to 10 billion, up 1.2%. Large caps were up 0.6. Mega caps were up 1%, not bad. And the 100 billion plus cap range flat. So kind of in line with the just the broader market. Dow was flat. S&P was basically flat. But overall, up and down, none of these areas were red. So the breadth was, you might say the breadth sort of outperformed the indices because, if all of these are green, then, I mean, there is buying going on in the market. It just wasn't in that precise areas that drive index performance, which is the biggest of the big stocks. So yeah, not too bad on breadth from market cap standpoint, although from sector standpoint, you could say it was a little bit of a wash. As far as industry wise, it wasn't a clear cut industry that was really doing well over everything else. As far as intelligence for this week, okay, so oil, we're looking for bounce in oil, and then LABD, so bear biotech, short Russell, and short Russell. So Stocklabs kind of looking for a little bit of a softer week as far as the general market. So if the Russell is kind of languishing a little bit, you might, if the indices are going to hold up, maybe you see the terror caps sort of press a little bit to keep the indices up, but the underlying market to see some deterioration is sort of the picture you would paint from something like this. And then on the downside, what should be on the downside? Okay, blockchain, defense contractors, retail, okay, NASDAQ as well, downside, and fintech, which is, momentum tech basically. And that's probably what this digital revolution ETF holds, a lot of tech and blockchain, crypto type related plays. So overall, from an intelligence standpoint, I would say Stocklabs is sort of looking for the slide that started on Tuesday to continue a little bit for this week. Now, if it gets, I don't know if it'll get really bad, but we had a big move in the indices. 9-10% on the Nasdaq from low to high, and then it could take a couple weeks to consolidate a move like that if the next move is going to be higher. If the trend is just going to be down, then you would expect sort of some of that to resolve or to give like an indication of that pretty early in the week. So if it's really soft early in the week, then I would avoid taking too much risk. Now we are already pretty close to another oversold signal. So we topped out, this oversold signal, it did its job. We got a good bounce, and now, maybe you're better off just waiting for the next one. So down here around 2.2 on a hybrid score will be oversold on this 12-month algo. We're at 2.35 right now. Now don't be fooled really by, it's only 0.15 from being oversold, because this algo is not just price dependent. The 0.15, it could be 500, 600 points on something like the Nasdaq. I mean, it's not like, oh, the next down move will be oversold. It doesn't work like that. So yeah, overall seasonality for April is supposed to be good. So you could probably be pretty confident that if we do get an oversold signal, especially here early in the month, that it'll get bought pretty quickly. So yeah, just something to keep an eye on. Decent week, consolidated. Obviously, the news is always hitting the tape at any one time. There's the energy markets. There's the war that is also related to the energy markets. There's the Fed always lurking in the background. The yield curve inverted this week. Not just 10s minus 2s, but all up and down the yield curve. Different curves have inverted. So there's a lot of recession watch going on now, and it's probably something you have to take pretty seriously. But we'll play it by ear, 1 week at a time. So okay, good week, everyone. Early in the week we'll be on the lookout for what trends are developing, and be back next week to see how we did. Talk to you later.